Hey guys, Jamie Moreng here with the Moreng Group. This week, we're going to talk all about interest rates. The great news is interest rates are on the decline. As a buyer, what does that mean for you? Is it a great time to wait till the spring market or even next year to look for a home as rates decline, right? Or as a seller, is it a great time to put your home on the market in January, February, March, or April? So what does the market look like? And since the Fed has told us that we're going to expect 3 to 4 rate hikes in 2024, with rates now at around 6.25, what's the best strategy for you as a homeowner or a buyer on the market? So in order to do that, I'm going to briefly take you over historically over the past few years what our interest rates have looked like and give you a little bit of information at certain peaks of what I've seen from the buying and selling activity in northern New Jersey here. So as you can see here, we're looking at a 30-year fixed chart where rates were. And now we're going to see, of course, in early 22, our rates were under 3%, right? This is the average here that we're looking at, right around 3.25, but our local lenders could go about a quarter below that at least. So low 3% interest rates, high twos early in 22. As we started to see that huge hike in interest rates, right, buyer activity completely stopped very, very greatly in this market going into the spring of 22. Rates kept on climbing throughout the fall of 2022. And what changed this was a substantial drop in rates come January of 2023. Now you see here in January 2023, we'll stop right here. You'll see that the 30-year fixed got to about 5.75 with some of our local lenders in January of 23. So we had all this inventory build up in the fall throughout the spring of 22. But once 2023 hit January and those rates were 5.75, all of the inventory disappeared within a heartbeat. So whether it was 5 to 7 months of supply here in Jersey City, we had less supply in suburbs in northern New Jersey. However, even if there were markets of 3, 4, 5 months supply, quickly within 2 to 3 weeks, all of that supply was eaten up. The demand, the buyer activity came back on the market, and all of the inventory was gone. That just shows you what a decreased interest rates will do, not only to the inventory, but also home values. Bidding wars went up. So instead of having, let's say, 2 to 4 offers on homes in the suburbs, right, a bidding war started happening again, 10, 15 offers on properties once these interest rates went down. So let's take a look too at what happened this year. So we were pretty gradual, and then rates started to climb again this past spring, right? The market was a little slower, although values and the market is very stable because inventory is still very low. Even as of October, mid-October, we were about almost 8% interest rates. Okay, so 2 months ago, we were at 8%. And now look at where we are now. Our lender, Cross Country Mortgage, is at about 6.25% interest rate now in 30-year fixed. Okay, and you can see this trend is going to continue based upon the Fed news. So the important thing to know as a buyer is that you want to start looking now, and if you could find a place right now during the holidays or early in the new year, you're going to have less competition. Your rate might be a little bit higher, but you could always refinance later, as opposed to waiting for the circus that you'll see in February, March, going into the spring market. I'm telling you, there's going to be a huge demand, and we're going to go back to that environment we were in, right, when we saw in early January of this year when rates were 5.75. If rates get into those fives, and even if they go into the mid fives to low fives, we're going to see appreciation like no other. Inventory is still an issue. So if you have any needs right now as a buyer and you're planning to wait, let's have a conversation about what that looks like for you, where you want to be, what your timeline is, because I'd rather see you find a place now rather than compete later at a higher price, if that makes sense. I'm always here to help. Hope this was helpful to you. And if you want to reach out, our local lender, Justin Benora from Cross Country, Like I said, with great credit and income, he's offering in the low sixes right now on mortgages. So I'd love to connect you with him. And yeah, happy to help regardless, but hope this information was helpful to you. And as a seller, just know that as rates start to drop, you're going to have more offers on your properties, right? You can expect a little bit more out of it, a little more equity. Your home value is going to go up slightly, a few percentages at least. But in the suburbs, instead of having 4 or 5 offers last year when rates were 7%, 7.5%, you might go from 5 offers to 10 to 15 offers, right? And that's where sellers start to see insane prices because you have 2 to 3 buyers out of that 10 to 15 offers per se that are gonna pay substantially higher than the other 80, 90% of those offers that come in. Talk to you soon. Have a great day.